All right, while we're talking about Bajaj Housing Finance, remember there are other couple of listings today as well. Tollins Tyres was one of them. The other one was Kross, a manufacturer of and supplier of trailer axles and suspensions, had a decentish debut on the exchanges. So Kross listed with a mild premium, and now that is expanded to about 10% as well. 3.5–4% seen for Tollins as well, currently now trading at a 5% premium to its issue price. So let's talk about Kross itself. We have the management of the company joining in. We have Kunal Rai, the executive director, and the CFO of the company joining in. Thanks a lot, Kunal, for joining in. The last time we spoke, you did speak about, the 70 crore capex that would yield the next 250 crores of revenues for you, and the debt repayment, which would aid your net profit margins by about 1.5% on account of reduction in finance costs. Let's talk about growth from here on as well. With the capex and with your organic growth plans, at what rate can your top line compound from current levels over the next 3 to 4 years? And what are the expected margins?
Hi, good morning. Thanks for having us. So, the last 3 years, we've grown at a CAGR of approximately 44%. Our top line has grown from 300 odd crores to 620 crores in FY24. And going forward, we plan to be doing a capex of approximately 70 crores. The allocation of this would be, the first one would be on our axle beam extrusion plant. The last 3 years, we've done very well in our trailer axle and suspension segment, from just 12% contribution to our revenue. That's grown to 44%, and we're one of the largest players and the fastest growing players in this segment. So we're going in for a new technology of the axle beam, which is currently being done in a fabricated design. We're going for an extrusion, which is a single piece construction, and we feel that is going to be a game changer in this industry. And the growth should be similar going ahead. Our component business with our OEMs has also grown, even after the M&HCV segment not expanding very much. And the new focus of the company would be on the export horizons. We've been a domestic player up to now. We've got two great customers whom we are working with, and we see a lot of developments there.
All right. Hi, Kunal. Good morning and congratulations first on a solid listing. This is Nigel on this side. Welcome to the stock markets. We'll be looking forward to interacting with you more often. And it's a bumper listing. The stock up 10%. Let's get a little bit more into detail then. Last year you were in that vicinity of around 620 crores. Now you have capex, which is value addition as you're explaining to us. And it could also give you a fairly good asset turnover. So by FY26, do you see yourself in the vicinity of around 950 to 1,000 crores? Is that possible? And also you briefly mentioned, since we're focusing on the top line, that exports as well, there's an opportunity out there. How much could exports contribute as a percentage of your mix, say in the next 2 to around 3 years?
So on the export front, the journey has just started. It was just 1% to our revenue in FY24. But we were working with a company based out of Sweden. They make propeller shafts for the European OEMs, that's LEX, and we've got close to 5 to 6 product families that we've developed for them, and that mass production has already commenced. The other company which we are working with is in Japan, and they're as well a M&HCV manufacturer. So with these two companies, we are looking at good growth from them in the next 2 years. We expect double-digit contribution from our exports to our revenue. These are confirmed orders backed by purchase orders and development costs.
Double-digit by when?
And in the next couple of years or so. And also from our issue size, we are looking at investing in machining equipment so that we can ramp up to the volumes which have been laid out by them.
All right. And
as well on our,
Kunal, 1,000 crores by FY26, doable? 950 to 1,000 crores, let's give you a little bit of a leeway.
We'll work our best towards growing the similar way we have grown. That's important. As we said, the MNHCV space isn't doing well, but we're in the trailer axle segment, and the prime mover, or you could say the tractor trailer segment within the MNHCV space, is growing close to 20-25% every year. So that's going to be a great portion from where our growth would be generating.
If you're growing at the rate that you are growing at in the past as well, I mean, that 1,000 crore number could come in 2 years instead of 3, as we were talking about it, and 25% plus as well. You know, you double your revenue in about 3 years. What the street wants to know is on your margins as well. You know, on your EBITDA front, you've improved your margins from sub 10%, say 9.9% in FY22, to about 13% in FY24. With increased exports coming in, increased proportion of value-added products coming in, where do we see margins headed? Should we see them around 15-16%? If yes, by when?
So, you know, we're a company which has always believed in backward integration. We do everything ourselves, right from the machining to the forging. And for our axle business, we even set up our foundry for our own captive requirement to manufacture brake drums and hubs. And that's how our margins have increased from 10% to 13% EBITDA in FY24. PAT has also gone up from 4.5 to 7.2%. In a span of 3 years, and with the axle beam extrusion coming in, that's a single piece beam. It's lighter, it's more cost effective, and also a shift to the exports. Our margins are going to get better as well.
How much better, Kunal? You're doing some backward integration. You have your change in your revenue mix as well. Do you see yourself get to the mid-teens, maybe 15% odd?
Yeah, we'll obviously target. We'll always target that kind of EBITDA margins in the couple of years with our beam extrusion and the exports ramping up.
All right. You know, you said that your current capex, the last time you joined us, of about 70 crores could yield revenue of 250 crores. That is still, you know, taking care of growth for just the next couple of years, given by the growth rate that you're targeting. Are you looking at capex beyond this 70 crores, say, over the next couple of years as well? If you could give us a sense of, at peak, what your revenue could be, largely because the rate at which you're growing, do you have enough capacity?
So on the utilization front, we are working currently at 70%. Utilization. From capacity point of view, the heavy investments which mainly go into the forging and the foundry equipments have to be planned well in advance. And from the 70 crores that we're doing, we're investing in more forging presses and a new line in our foundry as well, which would be suffice for our next 3 to 4 year growth plan. And as far as machining equipment is concerned, that can be planned in a shorter term as well. You know, a CNC machine or something can be available in 60 or 90 days time. So that's how we look at managing our capacities. And yes, we've laid out a 70 crore plan, which would be suffice for our targets that we have for the next 2 to 3 years.
So at current reckoning, you can do about 1,100 to 1,200 crores of revenue, including the 70 crore that you're doing?
Let's see, we really focus on our efficiencies. We've got a great gross fixed assets turnover times that's around 3.6x. We believe to do more with what we have. So we again, on the growth way, we look at growing in the similar fashion that we have in the past.
All right, Kunal, wishing you well, all the best. We're going to hold you to these numbers. Enjoy the day. Welcome to the stock market. It's been a good listing for you as well as your team.